Good day. Thank you for joining me. My name's Warren Davison, and I'll be taking you through the PSG Wealth Offshore Fund of Fund update. Economic data has been very strong over the last month, but markets have been more muted after an already strong start to the year. The ongoing vaccine rollout is allowing many economies to gradually reopen, which, in combination with a sizable fiscal support, particularly in the UK and the US, is supporting a big bounce in economic activity. Developed market equities gained in May, with an ongoing vaccine rollout and the fiscal support measures helping to offset concerns about the rising inflation. Emerging market shares also advanced, aided by US dollar weakness. Commodities gained, with precious metals being the best performing index component. Government bond yields were little changed in May. US investment-grade corporate bonds produced a solid total return and continue to outperform treasuries. Looking at the month-on-month growth in assets under management for the offshore solutions, we can see that May saw further support, with the AUM ending the month at $2.3 billion. The peer group rankings remain strong across the board, with the longer-term numbers still producing favorable results. 5 of our 6 fund of funds have produced average and above performance over their recommended holding period, which is illustrated by the black rectangles. Another summary slide here shows how the funds have performed over a 5-year rolling period. Here we can see that 3 of the 4 funds are in fact in the first quartile, with the global moderate being well positioned within the second quartile. What the slide also shows is the rank currently versus the rank 1 year ago. And interesting, what we can see with the global moderate is that the changes that were implemented a year ago have been beneficial, with the performance of the fund improving significantly. Looking at some of the short-term highlights. Over the 1 month, equity markets sold off in the first half of the month, and therefore affecting those funds with higher exposure. This is evident by those in the bottom performers. For the PSG risk radar, a few funds are on the list this month. 91 Global Multi-Asset Income remains on the radar, as its defensive nature has caused it to lag relative to its benchmark. For the pound funds, currency remained a headwind, with the pound strengthening 2.82% against the dollar. This had an impact and caused USD funds to underperform their GBP benchmark. Now, looking at the individual fund performance, and starting with the Global Preserver, the fund produced an absolute 80 basis point return for May and outperformed the Morningstar USD cautious allocation by 23 basis points. Over its holding period of 3 years, the fund produced an absolute return of 5.31% and 56 basis points of outperformance per annum over the period respectively. As we can see, and as I mentioned earlier, currency had the biggest impact for our pound funds. The pound strengthened against the dollar and therefore caused the fund to underperform relative to its benchmark. Looking at the ranking tables, we can see that the fund's rankings still remain strong across the board, with predominantly first and second quartile across the period. Looking at the global moderate, the fund unfortunately underperformed the custom moderate allocation for the month by 82 basis points. However, over the 5-year recommended holding period, the fund has still produced a solid 7.46% absolute return per annum, generating 28 basis points per annum of outperformance. Looking at the relative ranking, you can see the fund still produces second quartile results, which is favorable. Looking at the global flexible, the dollar fund had a strong month producing a 1.33% absolute return with 38 basis points of outperformance. The fund remains well above the Morningstar USD flexible allocation over the 7-year holding period as well as since inception. Comparing the fund to the ranking, we can see that the fund still produces top quartile results over all periods and currently is ranked second in the sector since inception, with the Global Flexible Pound Fund ranking first. Lastly, we look at the Global Creator. The fund unfortunately underperformed the Morningstar Global Large Cap Blend Equity by 121 basis points. The fund still remains above its sector average over the 7-year holding period, producing a 3.33% outperformance per annum for that 7-year period, as well as since inception, producing a 2.42% per annum. Looking at the relative rankings, here we can see the fund has still produced exceptional results, remaining first quartile across the board. For the since inception rank, we can see that the fund places 86th in the sector out of 1,802 funds in total. Overall, we can see that the PSG multi-management team is achieving their 3-pillar approach of consistent above-average performance at below-average risk while still maintaining a competitive fee. Thank you. Please take note of the following disclaimer.